Welcome to the deep dive. We cut through the noise, bringing you the key insights from, well, mountains of information. Ever pick up your phone, log onto your laptop, maybe check your investments, and just wonder what's really making it all work? So often it comes down to these tiny, powerful things, semiconductors. They're kind of the silent engines of our digital lives, and right now they're a massive force shaping the global economy. Today, we're diving deep into that world, the global semiconductor market, which is incredibly dynamic, and the absolute titan leading the charge, NVIDIA. If you're someone who uses tech daily, or maybe you own some tech stocks, perhaps even NVIDIA itself, then this deep dive is really for you, our mission. To quickly get you up to speed on the most important trends, what's actually driving them, and what it all means for how you understand tech and maybe your financial outlook. To do this, we've pulled from a really diverse stack of sources, industry stats from the world of semiconductor trade statistics, financial and ownership data from Fintel and Trenage, plus expert analysis from Kai Wealth, A Invest, Goldman Sachs, and NASDAQ. And get ready for some real aha moments. We'll uncover surprising market resilience, NVIDIA's frankly unbelievable growth, and even those fascinating, kind of counterintuitive things, like why a company might beat earnings but still see its stock dip. Let's decode it all.
It's a great mission. And yeah, there's definitely a lot to unpack here. When we talk semiconductors, we're really talking about the fundamental building blocks of, well, almost everything electronic around us.
Yeah.
From your smart toaster right up to these enormous data centers powering the cloud and AI, chips are just core.
That's a perfect way to put it. And the scale, the influence of this market, it's truly mind-boggling. So let's start with that big picture. First half of 2025, what are the numbers from the World Semiconductor Trade Statistics, WSTS, the authority here telling us?
Yeah, the WSTS data paints a very positive picture. The global semiconductor market hit an impressive $346 billion in just the first half of 2025. And what's really key here, this isn't just small growth. It's a substantial 18.9% increase compared to last year. That signals a significant rebound and continued momentum.
18.9%. That's not just a small uptick. Where's that rocket fuel coming from? Is it across the board, or are specific areas really booming?
Well, it's fascinating where the growth is concentrated. It's really being driven by a surge in, let's say, core computing capabilities. Logic chips, the processors making decisions, so an astonishing 37% increase. That's mainly fueled by huge demand for data center infrastructure and, importantly, this exciting emergence of AI edge applications.
AI edge. So bringing the processing right onto the device itself, like smart cameras or cars.
Exactly, making them faster, more secure, less reliant on the cloud for every little thing. Then you have memory chips, vital for storing all that data. They weren't far behind, jumping 20%, again, largely thanks to data centers and AI. Sensors also did really well, up 16%. We saw, more moderate growth in analog and micro, both around 4%, and even slight dips in discretes, down 4%, and optoelectronics basically flat. But the real momentum, undeniably, is with those foundational components powering AI.
So this isn't just steady growth, is it? It feels more like a serious comeback. Looking at the WSTS chart for quarterly billings, it really does look like a roller coaster. Billings dropped from, $152 billion in Q1 2022 down to $120 billion in Q1 2023. That's a huge dip, over 21%. But then the recovery looks just as dramatic.
It really is a classic V-shaped recovery almost. It illustrates the market's resilience quite well. From that low point of $120 billion, the market climbed steadily back up, hitting $180 billion in Q2 of 2025. That comeback represents a really robust 19.6% growth quarter over quarter. It's a testament to how essential these things are.
Okay, so with that impressive rebound, what's the forecast? Looking at the rest of 2025 into 2026, is this momentum going to stick around?
While connecting this to the bigger picture, WSTS has actually revised its full year 2025 forecast upward. They're now expecting $728 billion. That reflects an impressive 15.4% annual growth. And that's a 4 percentage point increase from earlier estimates, which really speaks to the market's underlying strength. Looking further out, the 2026 outlook is projecting an $800 billion market, so still growing, around 9.9%. Regionally, the Americas and Asia Pacific are expected to keep leading the way. Europe's strengthening. Japan might see a slight decline.
That's a fantastic overview of a market clearly roaring back. But, behind these huge surges, there's often one name pulling a lot of weight. And in this story, that name is definitely NVIDIA. Let's zoom in. What's NVIDIA's status right now, early September 2025?
NVIDIA, ticker NVDA. Yeah, they remain absolutely pivotal. As of September 3rd, the stock was around $170.62 per share. What's truly remarkable, especially if you've been watching it, is the year-over-year growth. A staggering 60.64% increase from about $106 just a year ago. This has pushed its market cap to a massive $4.163 trillion.
Those are eye-watering numbers. But then we get to the Q2 earnings report, end of August. Adjusted EPS, $1 sale Fent beat the $1 expectation. Revenue, $46.7 billion beat the $46.1 billion forecast. By all accounts, solid. Great numbers even. But then the stock slipped about 3% after hours, so they crushed it on paper. But the stock dipped. What's going on there? That seems counterintuitive.
It really does, and it raises this important point about market psychology, especially for investors. Experts point to a few things behind this lukewarm reaction. First, while they topped the official estimates, they fell just short of the unofficial whisper number that was supposedly $1.06.
Ah, the whisper number. So like the real expectation on the street.
Exactly. It's subtle, but when expectations are that high, even a tiny miss like that can cool things down. Second, that geopolitical uncertainty around China. Zero H20 AI chip shipments in Q2, and the guidance for Q3 assumes the same. That's a big wild card.
Right, like the market was expecting an A+ and they got an A. Still great, but not the blowout some wanted.
Precisely. The market had already priced in a bigger move, maybe around 6% post-earnings. So traders were a bit caught off guard. And lastly, even though 56% year-over-year revenue growth is incredible, some perceived it as slowing compared to even higher growth in prior quarters. So a perception issue? Maybe.
I get it. Strong quarter, but not the absolute rocket ship some had dialed in given the stratospheric expectations. But the bigger picture for NVIDIA's core growth engines, that tells a different story, right?
Yeah, absolutely. Look, the data center segment is, as they say, absolutely killing it. This is where their AI chips power the cloud, large AI models. Sales surged 56% year over year to $41.1 billion. That accounted for a massive 88% of their total revenue. And platforms like Blackwell are boosting AI training speeds like up to 4 times faster. They're really cementing their dominance there.
We hear NVIDIA, we think AI, but is it all AI or is the growth more diversified? Are other parts pulling their weight?
That's a key point. While AI is huge, their growth is quite diversified. Gaming revenue, for example, jumped a very healthy 49% to $4.3 billion. That's GPUs for gamers, new game launches. Their professional visualization business, automotive also growing at double-digit rates. They're definitely not a one-trick pony. Plus, they keep innovating. New stuff like NVLink Fusion for better GPU connection, the RTX PRO server for corporate AI, upcoming workstations like DGX Spark and DGX Station. They're constantly pushing.
Okay, so despite these short-term market wobbles, it sounds like the smart money, the big institutions are still betting big on NVIDIA. Who owns them and what's the sentiment there?
The institutional confidence is undeniable. NVIDIA has, get this, 7,493 institutional owners. They hold over 18.6 billion shares. That represents a huge chunk, 76.58% of the company, held by major financial players. You know, the big names, Vanguard, BlackRock, FMR, LLC. They're among the largest shareholders. And Fintel's fund sentiment score indicates high institutional accumulation, meaning these big funds are actively buying more. Here's a fascinating detail. FMR, LLC, that's Fidelity, increased its NVIDIA stake by a whopping 680.72% back in November 2024. That's aggressive positioning.
Wow, that's conviction. So those are the human heavy hitters. What about AI's take on AI? How does TrendEdge's AI score rate NVIDIA? It looks beyond just the usual financials, right?
TrendEdge's score is really interesting because it pulls in different data types. It rates NVIDIA as hold overall, but the breakdown shows a bullish projection. Fundamental 8, alternative 7, technical 6. And this is where that alternative data comes in. It's not just balance sheets. For instance, web traffic. Over 30.7 million monthly visitors to NVIDIA.com, and it's growing steadily. That's a lot of engagement customers, developers, partners.
30 million visitors. That says a lot about their ecosystem reach. What else does that alternative data show? What's happening under the hood?
It's quite revealing. Job openings. NVIDIA has around 3,000 open positions right now. That's up 50% month over month and an incredible 200% year over year. That signals really aggressive expansion plans, confidence in the future, employee sentiment, very bullish. 93% report a positive business outlook internally. Plus, you see significant follower growth on social media, Twitter, Instagram, LinkedIn, and even Reddit sentiment in investment communities is bullish, scoring 60 out of 100.
Okay, that paints a strong picture of current activity and buzz. But let's look further out, the really long-term vision. What's CEO Jensen Huang projecting for data centers and NVIDIA's slice of that pie?
Right, connecting to the bigger picture. Huang's forecast is seriously ambitious. He expects data center capital expenditure the money companies spend building these huge computing hubs to jump from $400 billion in 2024 to an astounding $1 trillion by 2028.
$1 trillion just on data centers.
That's the projection. More than doubling in 4 years.
Yeah.
And if NVIDIA can just maintain its current market share, roughly 30%, That alone could mean $300 billion just from data center GPU sales for them. It really highlights the massive potential runway they're aiming for if they hold that share.
That is a staggering number. But with such huge expectations, there have to be significant risks. What should investors or even just people watching this space be aware of?
Yeah, high growth often comes with high risks. Valuation is definitely one. The stock's trading at a price-to-sales ratio over 30x, forward PE around 35x. These are really high multiples. It means investors are betting heavily on future growth, leaving, as experts say, little room for mistakes. Any slip-up could hit the stock hard. Then there's gross margin pressure. Big customers like Google, Amazon, Microsoft are developing their own chips that could eat into NVIDIA's dominance. Plus, you've got increasing competition from AMD and also Huawei, often with lower-cost alternatives.
And the China situation remains a big cloud overhead, doesn't it? Huge market, but politically tricky.
Absolutely. The China conundrum is significant. U.S. export control stopped H20 AI chip sales in Q2, and Q3 guidance assumes the same. China's revenue contribution has already dropped from 21% down to under 15%. That's ongoing uncertainty. Plus, there's been talk of sluggish shipment of GB200 chips, their important new product. That's seen as a short-term hurdle, though they say midterm issues are being addressed.
Okay, so valuation, competition, China, potential bottlenecks, it sounds like a minefield. How is NVIDIA navigating all this? What's their strategic playbook look like?
They're definitely not sitting still. They're tackling these risks proactively with a few key strategies. First, global diversification, aggressively expanding into India, Southeast Asia, Latin America, setting up AI infrastructure collaborations there, spreading the risk. Second, strengthening Western ties, doubling down on relationships with the big U.S. cloud providers, AWS, Azure, Google Cloud, and European AI startups too. They're deploying advanced, higher-margin products there, like Blackwell Ultra and Spectrum XGS Ethernet.
And China specifically, how do you even operate there with these export controls?
What's fascinating is their adaptation. They're developing these compliant chips, the B30A and RTX 6000D models, basically scale down performance to meet regulations but still maintain a presence. News just came out, actually set forth, that samples of the B30A might ship as early as this month, apparently priced at twice the old H20 chip if approved. So trying to capture value even with restrictions. And beyond hardware, they're pushing their software platforms, CUA, Omniverse, AI Enterprise globally. That creates recurring revenue, especially valuable where hardware sales are limited. It builds that ecosystem stickiness.
It definitely sounds like a multi-pronged strategy. Looking ahead, what are the key potential catalysts that could really move the needle for NVIDIA's stock in late 2025, maybe into 2026? Goldman Sachs highlighted three, I think.
That's right. Goldman Sachs flags three key things for you to watch. First, hyperscale data center capex reports. October 2025 is critical. We'll hear from Amazon, Alphabet, Microsoft, Meta about their spending plans. If those capex forecasts get revised upward, it signals continued strong AI investment. You mentioned Meta projecting maybe $72 billion, Alphabet $85 billion. A lot of that aimed at NVIDIA-powered data centers. So watch those reports.
Okay, so keep an eye on the big cloud guys spending in October. What's catalyst number two?
The Rubin product timeline. Rubin is the next big thing after Blackwell, slated for the second half of 2026. It's using cutting-edge tech, 3nm process, HBM4 memory. Super powerful stuff for AI. NVIDIA's already reaffirmed a smooth transition despite some rumors of delays. Any positive updates on Rubin would definitely boost confidence in their long-term tech lead. And finally, Catalyst 3 is just more clarity on the China business. Any news on compliance, market demand, policy impacts, that would reduce a lot of the current uncertainty.
Makes sense. So given all this, the potential catalysts, the risks, the volatility, what does it mean for you as an investor? What are some trading strategies or levels people are watching?
Well, Kindwell's technical analysis suggests some key levels. Profit-taking seems likely between $172 and $184. A strong move above $184 could potentially spark a push towards $200 or even higher. But if it falls below $172, that might trigger wider selling. For those thinking about buying the dip, the analysis suggests looking near $172 or maybe more aggressively down in the $155 range if it gets there. It's also interesting that options implied volatility, basically the market's expectation of future swings, has decreased since earnings. That signals maybe cooling demand for huge moves, but still potential for short-term ups and downs. It's a market needing careful attention.
Definitely sounds like a dynamic situation needing a considered approach. Okay, let's wrap up with a peek into the crystal ball. What kind of price predictions are out there for NVIDIA? End of 2025, maybe even way out to 2030.
Predictions, as always, are all over the map. It really shows how tough forecasting is for a company like this.
For the end of 2025, you see estimates ranging from maybe $145 on the low end to a more bullish $264, looking way out to 2030. Well, things get really speculative. You see some incredibly bullish forecasts, like one Reddit user projecting $750 per share based on estimated sales hitting $700 billion across all their markets. That would imply a $20 trillion market cap. Others are more conservative for 2030, maybe in the $150 to $500 range. It just highlights the huge range of possible outcomes. Massive continued dominance versus more tempered growth as competition increases.
Wow, $750 a share, $20 trillion market cap. Those are definitely attention-grabbing numbers, even if highly speculative. Okay, as we wrap up this deep dive, let's quickly recap the key takeaways. We've seen the global semiconductor market making a remarkable rebound, really fueled by that surging demand for logic and memory chips, especially for data centers and AI. And NVIDIA is right at the heart of this, just dominant in AI infrastructure with a really robust product pipeline.
Right. But we also dug into that fascinating paradox. Even stellar earnings can get a lukewarm reaction when expectations are through the roof. Valuation concerns, geopolitical risks like China. These are real factors. Yet NVIDIA isn't standing still. They're strategically adapting, diversifying globally, strengthening partnerships, even developing compliant chips to navigate those tricky regulations.
Exactly. So by understanding these dynamics from the big market trends down to one company's strategies and the nuances of investor sentiment, you are now, hopefully, incredibly well informed about this critical sector that really powers so much of our world.
Now, for that final provocative thought to leave you with, given NVIDIA's relentless innovation and its push into so many new areas, are we looking at a future where computing is basically the future of NVIDIA? Or are we maybe on the cusp of a more diversified AI landscape where new players start to seriously challenge its current dominance? How will NVIDIA's own aggressive adaptations actually shape the next decade of tech?
Something to definitely think about. Thank you for joining us on the deep dive. We hope this gave you a clearer, sharper view of the semiconductor market and NVIDIA's AI future. Until next time, keep digging deeper.